Hey everyone, me Kevin here. If you own a home or rental property and you have not yet taken advantage of mortgage forbearance, you don't know if you can, maybe you just bought a house this year, or maybe you've owned a home for years, or it's a rental property, I highly encourage you to watch this video because it could make you some real money. And this is stimulus money that, well, let's just say it could be a whole lot more than a darn stimulus check that we've been fighting for the last 9 months. Let's come up with an example here. Let's say you pay $2,500 per month for your principal, interest, taxes, and insurance on a mortgage. And let's say $2,000 of that is principal and interest. Well, if you stop making your payments for the next 12 months after taking mortgage forbearance, don't just blindly stop making your payments, and let's say you only had to cover insurance and property taxes, worst case, then you would save $24,000 over the next 12 months. Now, if somebody told you that you could take that money and add it to the back of your loan, and maybe your loan has another 20 years left, well, you could take that $24,000 and invest it. And see, that's the beautiful thing about compound interest. Quick example here, we take a compound interest calculator. If we invest $24,000 for 12 years, just 12 years, doesn't even have to be 20, at 6%, we come up with an ending balance of $48,000, which means we double the money that we save in 12 years investing at just 6%. The S&P 500 has returned more than 7% annually on average for the last 40 years. Now, no guarantees that it will going forward, but the point is, if you don't have to make your payments for the next 12 months and you take that money and you invest it, you could double the money, and basically it's like you just got a free $24,000. So how does this work? Well, first, we've got to understand what the law is and what some deadlines are that are coming up. So if you're interested in taking mortgage forbearance, let's get an understanding of this before we do anything. So I encourage watching the entire video, watch it twice if you got to. And remember, you could always get 4 free stocks via the link down below. Deposit $100, they'll give you 4 free stocks. So while you're watching the video, you could even get 4 totally free stocks when you deposit $100 and get life insurance in as little as 5 minutes. Check out those links down below. All right, so here we go. The CARES Act allows you to take mortgage forbearance. In order to take mortgage forbearance, you need to contact your loan servicer, that's the company that you make your payments to, and ask them if your loan is federally backed or not. If it is federally backed, you're going to have the best mortgage forbearance options. If it's not, you're going to be subject to whatever mortgage forbearance options your loan servicer has. Oftentimes, if your loan is not federally backed, you're probably going to have to pay back your forbearance money at the end of the forbearance term, which isn't great because that's kind of like you having to make a lump sum payment at the end. Sometimes these loan servicers will say, hey, you can pay back a little bit every month thereafter. Sometimes they'll say you have to pay everything. Sometimes they say, hey, we could do a loan modification. You got to be careful with these. If at any point a loan servicer is asking you to sign a contract or sign to do a loan modification, be careful. Those are big red flags. So if you have to sign something, provide documentation, or you're being offered a loan modification, I personally would think twice about going down that road. The most ideal road is going down the path of having a federally backed loan, which you either have or you don't have. And again, you can find out by calling the person you make your payments to. The number's on your statement. Call them up. Hey, I'm interested in mortgage forbearance. By the way, is my loan federally backed? No? Okay, maybe think twice about moving forward. And you can research more options. If your loan is not federally backed, you can even ask them on the phone, what options do I have? And see if those options work for you. Whatever they give you, make sure you get it in writing. Do not take anyone's word for it. They can tell you one thing on the phone and send you something totally different in the mail, and then you're screwed. That's not good. You don't want to get screwed. Nobody wants that. Instead, best case scenario, you call and they say, yeah, hey, your loan is federally backed. And maybe it's even an FHA or conventional loan. And those are going to go down the best scenario path for us. VA, not so great either. But FHA and conventional, you're going to have some beautiful options. So if you make it through that funnel, take a look at how beautiful mortgage forbearance could be for you. Now, in order to qualify for mortgage forbearance with a federally backed loan, the law only requires you attest to a hardship that are direct or indirect. And this is really broad. I mean, an indirect hardship, in theory, could be something like, I might lose my job in the future, or my hours might get cut. Who knows? What indirect or direct is not defined, at least from what I saw in the law, but you could always clarify this with your loan servicer, or if you want to, talk to a CPA or an attorney. But in the meantime, the law specifically says that you do not need to provide any documentation. In fact, page 210 of the CARES Act provides you exactly this information. If we pull this up here, this is page 210 of the CARES Act. And what you're going to find on page 210 is this right here, forbearance. During the covered period, a borrower with a federally backed loan experiencing a financial hardship directly or indirectly related to the COVID-19 emergency may request forbearance on a federally backed mortgage regardless of delinquency status by submitting a request to the servicer, aka call them or fill out a form on their website, and here you go, affirming that the borrower is experiencing a financial hardship. That's it. Notice down here, it actually says that upon receiving a request for forbearance from the borrower, the servicer shall, with no additional documentation other than the borrower's attestation of a financial hardship caused by COVID, and then on the next page over here, and with no fees, penalties, or interest beyond the scheduled amounts due, charged to the borrower, provide forbearance for up to 180 days, which may be extended for an additional 180 days. So that's how you can get that 12 months of forbearance, basically by raising your hand and asking for it. But again, you kind of get funneled down into, you probably want to have a federally backed loan, unless your servicer is generous and they've got some good options. Federally backed is going to be ideal. I would say probably around 60 to 70% of loans are federally backed. And ideally beyond that, you probably want to have a conventional loan or FHA loan. The VA loans are a little tougher. They require more strict repayment on VA loans. Now, here are some other important facts to know, and I'm going to link some more information down below. But if you own a single family house and your loan is federally backed, you generally are going to get 180 days of forbearance with the extra 180 days. That's your 12 months. If you have a multifamily property, you're generally only going to get 30 days of forbearance with the option to extend twice, which means you're really only getting 90 days of forbearance. When it comes to impound accounts, in some cases, when you pay your lump sum mortgage and it includes your property taxes and insurance, you might not have to pay your impounds either. However, you probably still owe your property taxes and insurance unless you get forbearance through those companies individually, which means you should probably keep money aside to pay for that, and your loan servicer may end up charging you a larger monthly amount when your payments resume just to catch you up on property taxes and insurance for the year after you take mortgage forbearance. That would be normal. That's money you owe. That's not money you're taking forbearance on anyway. Just be prepared for that. Now, for the 12 months of principal and interest you didn't pay, like the $2,000 per month in the example we did earlier, you can generally request to have this money hooked onto the end of your loan. Be careful. Stay away from signing documents that say different things. Stay away from loan modifications and stay away from verbal stuff. Get these things properly documented. As long as you can hook this money onto the end of your loan, which you can do with a conventional loan, or if you have an FHA loan, what they'll do is they'll just record a second, it's like a second mortgage against your property. That's not a big deal. That's the same thing as adding it to the back of your first loan. There's really almost, I mean, with the exception of a couple recording fees, like $75 here or there, there's virtually no difference between a $300,000 loan and a $290,000 loan with a $10,000 second loan. It's maybe just mental that, oh my gosh, I got two loans on it, right? But it's virtually there's no difference there. That's the FHA path, not something to be worried about. Now, when you go to pay this off will most likely be when you sell the property or you refinance the property. Those loans will get paid off. That is totally understandable. So realize when you take mortgage forbearance, you're kind of wanting not to sell or refinance for a while so you could take advantage of that free money. The longer you take advantage of that free money, the more benefit you can get out of it. But in the future, you are going to have to pay that original $24K back, that original forbeared amount. The only way it really becomes free is if you invested with that money in the meantime and you were able to make a profit on that, right? Then it's kind of like using other people's money for free and making money with that money, right? Now, a few good tricks. No matter what type of forbearance you take, I always recommend you document in writing what you were told, have them email you, or if you talk to them on the phone, ask them for their customer service email and shoot them your own email. Hey, I talked to this person at this time. I just wanted to verify this is what happened. If you're in doubt, keep the money you save in a safe place in the event something crazy happens, that either your job gets laid off and it's like, oh crap, here it is. This was that indirect hardship I was worried about and you really need it for that. Or you need to pay it back because something went wrong. It's not a bad idea. Now, for those of you who own multifamily properties with federally backed loans, you have a deadline coming up. The deadline is December 31st. So that is if you own multifamily real estate, duplex, triplex, fourplex, generally, and possibly even larger, generally you're going to have to request forbearance by the end of the year. Though keep in mind, you're really only getting those shorter term extension periods anyway, the 30 days, and 30 days on multifamily. When it comes to single family mortgage forbearance, generally, you have up until 120 days after the national emergency of the pandemic actually ends. The pandemic hasn't actually ended yet, so from the time of recording this video, we have at least 120 days if the national emergency ended today. So it's kind of like you still got 4 months after the national emergency ends to request mortgage forbearance. Something to think about. It's free stimulus money. Now, it's very important that you're aware of the law when you ask for forbearance. Keep in mind, I'm going to link all the information down below, all my sources, law on the CARES Act, and I'm also going to link the Consumer Finance Protection Bureau's website on this down below on mortgage forbearance. When it comes to credit, you may see your credit score temporarily drop 30 to 50 points when you take forbearance. However, this impact tends to go away after a few months. I personally applied for forbearance to understand the process. I never ended up missing a payment, and I saw my credit score go down 40 points, and then within 2 months, it was right back where it was. Also, when it comes to qualifying for a loan after you take forbearance, you generally need to show that you've made your payments for at least 3 months in a row after taking forbearance, and then you could generally qualify for a new loan again. Confirm this with your lender, though. Now, keep in mind, if you do take forbearance, again, you might not want to refinance. And there is a risk factor here because this potentially means if you have a higher interest rate now than what interest rates are now or will be in the future, you might get stuck with a higher interest rate because you don't want to refinance because you're taking mortgage forbearance. So you be careful of that. But let's say you're uncertain about the future and you want to attest to this and you want to get mortgage forbearance. Best case scenario, just to avoid any possible ambiguity, try to do it before December 31st. Technically, the law says you should still be eligible to get it after December 31st. But we all know that what the law says and in practice what mortgage servicers actually do sometimes can be frustratingly different. Now, if you did just close on a home this year in 2020, it is possible that you may have signed a document waiving your right to take forbearance. So go to that big stack of documents that you signed, that copy you got, and see if there is an anti-forbearance form in there saying you won't take mortgage forbearance. If not, you can always call your mortgage servicer. Just ask them. When in doubt, call and then confirm in writing. Compared to March and April, servicers today are much more familiar with mortgage forbearance. I remember calling the day this act was passed, and they were absolutely clueless. They're like, okay, we'll put your name down, and when we figure it out, we'll get back to you. It was basically the response I got then. Today, I expect much better customer service and, well, knowledge. But keep in mind, know your rights. I'm going to link some very important things down below. The CARES Act. It's good for you to have this in front of you when you go talk to your mortgage servicer. And that way you can talk to them about what you see in the law and how this aligns with what they're telling you. I'll also link the consumerfinance.gov mortgage forbearance page down below. On a personal note, if you have no intentions of buying real estate or refinancing for the next, at least 3 months to a year, in my opinion, there's really no reason for you not to take mortgage forbearance. It's essentially free money. It's a form of stimulus to help you get over any potential uncertainty coming up. Remember, you do have to attest to a direct or indirect hardship. No clarity on exactly what that means, so you'll have to decipher that for yourself. But that's my POV. Thank you so much for watching. Get your 4 free stocks, get your life insurance, and the links down below. And folks, we'll see you next time.